Hi everyone, my name is Renee Angelasante, and my team and I are going to walk you through our proposal as it relates to the Paramount Company's decision to introduce a new high-end product that they're calling Clean Edge onto the market. So Paramount is a very large health and beauty company. They currently have two existing non-disposable razor product lines in the value and moderate segments of the market. They don't have any product right now that is competitive within the superior premium segment of the marketplace. Hence the invention of Clean Edge, which they're expecting will do very well, considering that it's a very new product, it's got innovative technology features, and it will give them somewhat of an edge over their competitors. So just in thinking about the positioning of Clean Edge into the marketplace, Paramount's considering two strategies. The first one is a niche positioning where they are targeting consumers who really care about their shaving experience. The branding for that would stand out quite a bit from the Paramount, the bigger Paramount brand, and it would be Clean Edge by Paramount. And the second strategy would be the mainstream positioning. So really appealing to those consumers who, want a good product that will satisfy their need and will be moderately priced, but will essentially get the job done. To assess what the best approach is for positioning, we start to think about Paramount's objectives. So Paramount's seeking to be innovative. They want to offer the most technologically advanced product on the market. They're looking to dominate the market, which they currently do, but they'd want to look to retain that market leadership position as well as perhaps strengthen it. They're also looking to diversify their existing product portfolio. They've got a line that is targeted towards the value market and the moderate market. So now they're looking to expand into the superior market, which is growing a little faster than the other two. And they're also looking to appeal to a new consumer base. Get some new loyal customers, that are interested in buying their product. In performing a situational analysis, we were able to assess where the market's at and where Paramount's at and what they bring to the table with the launch of this product. So some of the strengths are that Paramount's a market leader. They have a very strong position in the market right now in terms of retail unit share. They also, with the launch of Clean Edge, they would have the most effective, innovative product on the market. So it would give them that edge that they're looking for over their competitors. Paramount is also a strong, well-established brand name that has a very loyal customer base. So that certainly is a strength for them in this launch of this new product. Some of the weaknesses, though, Paramount has not released any iterative designs for their existing products, and they have not launched any new products in the last 5 years. They don't have an existing presence in the superior premium segment of the market. And they also, to the extent they do launch, they will experience some percentage of cannibalization over their other products. Some of the opportunities that come along with that, though, would be the diversification of their existing portfolio line. They will now have a product in each one of the segments. It will help to increase their overall market share and help them to maintain and even strengthen their market leadership position. It'll also give them an opportunity to establish a new customer base, perhaps younger consumers that may be more loyal. In addition to that, to the extent that this goes well, they may be able to launch a similar product in the women's non-disposable razor market. And lastly, just some of the threats that we considered were the fact that there is a competitor out there that's much smaller that has a product that's launching slightly earlier than Paramount, which has similar technology features. The media and promotion expenses may at some point exceed retail sales to the extent that they can't gain enough market share. And just in general, new competitors are introducing more advanced technologies at faster iterative paces. So it just may be something that Paramount wants to consider.
Proposing an approach to breaking into this market, we have to maximize the appropriate customer targeting based on our market research. And there are 3 behavioral objectives for purposes of this research. Your social emotional shavers, your aesthetic shavers, and what we're calling our maintenance shavers. So the social emotional shavers, that's about 39% of the non-disposable razor users. And they search for products based on functionality and messaging, and it's an essential part of their daily grooming. Makes them feel more attractive and confident, and that's what we're trying to go after. The aesthetic shavers is about 28% of the non-disposable razor users, and they're searching for more effective hair removal. That's their primary objective. They consistently shave to remove that unwanted hair, and to them that means smoother skin. But who we're not targeting here are those maintenance shavers. This is about 33% of the market, and they view all products as the same, and that's certainly not the target demographic that we're going after. They lack interest in the product category, their routine is inconsistent, and they view shaving more as a chore. When you look at that market, they're certainly not going to look for something that's at a higher price point because to them everything is the same. We need to capitalize on the brand recognition. So we do have folks in that maintenance shaver with the other 2 products, but that's not what we're doing here with Clean Edge. But we do want to maintain the brand recognition for Clean Edge by Paramount. We're a market leader in that space, and we need to make sure that we remain as such, especially breaking into this new niche market. The launch timing here is key. From 2008 to 2009, in just a 1-year period, there were 22 new SKUs or SKUs. Those are your stock keeping units that were introduced into the market, and most of which were line extensions from existing products in the super premium space, and that's an important key here because that's what we're breaking into. So in 1 year, we had 22 new SKUs hit the market in super premium. And most of them, like I said, were line extensions that were toting new product technology and new product advancements, but there's a lot of competition here. So in an already saturated market, it is imperative that we get out as quickly as possible, because if we don't, we will miss our opportunity to capitalize on some growth. In terms of a strategic implementation, we need to gain alignment across all product teams. This is not the only product that Paramount is launching. We are currently a market leader in 2 other areas, so we need to ensure that we have alignment from those existing teams. Breaking into this niche market, there could be a potential for cannibalization, and we recognize that. And while there have been some heated conversations, we also feel that this is a necessary evil in order to move with the market. The market is changing, and we need to meet those needs. We also have to ensure that we establish achievable launch deliverables. We have a $15 million marketing budget set aside, and we need to ensure that the promotion and the resource allocation is appropriate to meet the demand. In terms of distribution channels, I think that's one thing that's important here to recognize that about 10 years ago, food stores were the primary retail point for this market. At over half of the volume that was sold for razors was done in the food store. So your Giants, your Food Lions, your Krogers and such. From 2000 until now, that has dropped to 42%. So there's been a pretty steep decline over the less than a decade at this point that this case was done. We also need to target your drugstores, your CVS, your Walgreens, but another large portion of the business is moving from retail, or the food stores rather, into mass merchandisers. So those are your Targets, and even from an e-retail perspective, your Amazons. And that's where we see the growth. There's been a steady increase year over year in the percentage of volume sales. And we would also target, it's small potatoes, and we're not focusing primarily here, but from a distribution perspective, we do need to keep in mind the club stores, your BJ's, your Sam's Club, and such. We really need to focus on knowing the new customer and how to reach them. This is an entirely new area for the company, but not a new area for the market. So we need to be sure that what we're executing on is what the customer actually wants. And Paramount recognizes this is a new strategy in a target market, and we must be willing to reevaluate at the 30, 60, and 90-day mark to make sure that we are meeting our objectives. And if we feel there's a missed opportunity, we really need to realign. And that's where Deanna's going to come in and discuss some of the KPIs and the metrics that we're working towards.
Thank you, Erin, for presenting our proposed approach and strategic implementation of the Clean Edge razor in the niche market. I'd now like to present the financial data that supports our decision. Based on the 2009 actuals and the data within the case, we've estimated that Paramount, at least in the short term, will continue to see growth within these two product lines. However, Paramount knows that the Avail and Pro alone will not keep them relevant and the leaders in technology within the razor market. So they must introduce something new, leading to the inevitable of the cannibalization of their other two product lines. But how much of the potential future sales of their current lines are they willing to risk? On a net gross margin per unit basis, meaning the additional margin they would be earning after taking into account the foregone margin from the Avail and Pro lines, the niche market is superior. But to corroborate the findings, we must also look at the P&Ls of both positionings. So we'll start with the niche positioning. The units and values that are presented in this slide are based on the initial forecasting done by the Paramount team. So we've also made the assumption within that the forecasted units to be produced would actually all be sold as well. The cannibalization of the gross margin that we discussed on the previous slide has also been taken into account in these calculations. In both year one, which would be 2011, and especially in year two, as you can see, Paramount will net a profit on the clean edge. The pricing, the retail pricing that is putting them above all the other competitors within this market. And actually, this could be an advantage because a high price could correlate to prestige. Even if all projected units do not move, the modest advertising budget and promotion budgets that we see within would help to protect the impact of the bottom line within their niche positioning. Positioning, and without much analysis, one can see that the most significant factor of this year one forecast is that they're going to have a net loss of about 14 million. Paramount would have to sell about 7.2 million more units than the projected 3.3 million just to even break even, and that's highly unlikely. The main factor, as discussed in the case, is advertising and promotion costs. And with the NAV coming in the year before, and the pricing and advertising of that product seems like they're targeting the mainstream segment. So that would mean that we would have to use all of our budgeted advertising just to try to compete with them within the segment. And being in the segment with them will also probably even take more of our pro customers away, either going to the NAV or us taking those customers. So, I mean, in the end, the mainstream approach doesn't utilize the utility theory in the right way. It doesn't maximize shareholder return. If all Paramount wants is to become this leader in technology and just completely get rid of their moderate segment, then yeah, a loss in year one could be okay because you're projecting for the future. But it's not the goal. It's not the goal to just become a niche, super premium supplier. It's to become the leader in all divisions, and doing the mainstream approach won't create that. So with any decision, there's always risks involved, and the main one is the pro has a very mature product life cycle, as mentioned before. So if there's no replacements for it and just phases out, then we're going to lose that whole segment. So that's something to keep in mind. And also within that segment, the competition that NAV's bringing in could potentially take more of our customers away, and we're not competing with them directly with our super premium product. And with the cannibalization and competitors, the potential loss just as the leader, in this market, in the razor market in general, and also the leader in products move because of these changes. We'd like to conclude with a few takeaways. We propose that the Clean Edge be put in a niche positioning named Clean Edge by Paramount. This will create a moderate marketing budget impact and limit the cannibalization of the Pro and Avail product lines, helping Paramount to continue to be the leader in the razor market. Thank you for your time.